In Kenya, Essar and Telkom Kenya currently charge between 1 and 2 shillings in SMS, but the CCK hopes to lower that rate further. To find out more, I'm now joined by Dobek Pater, Telecomms Analyst at Essar and Telkom. Dobek, thanks so much for joining us today. Price wars ensuing in Kenya, and we also know that it's been quite a negative to the overall equity market for some time. So this is how important the telecom sector is in that country. We also know that the CCK has said that the cost for these telecoms companies when it comes to the SMS services is just 0.01 shillings, and they have really been making incredible margins. That is now changing rapidly.
Well, it's the case not only in Kenya but across the continent. SMS is probably one of the most profitable service you can provide as a mobile operator. Effectively costs you next to nothing, pennies or fractions of a penny. But yeah, it's something that the regulator is expected to look at within the greater framework of lowering mobile termination rates, what operators pay to each other for exchanging traffic, and also looking at expecting that to have a downward pressure on prices, retail prices or tariffs of communications as a whole.
So now it's not going to be really about the margins, it's going to be about the volumes, I would say, because the average SMS per subscriber is reportedly standing at around 13. So surely people are going to be SMSing a whole lot more. So it's not, as I said, about the margins, but about the volumes that we'll be seeing for most of these companies.
Cases, there's a case in the Philippines, for instance, which is an SMS market, and a lot of SMSing taking place there versus voice communications. But the entire voice communications business is becoming a volume business. It's effectively what the Indians have been moving towards. It's a minute factory. You try to sell it at a lower cost, lower margin, but move large volumes. Africa's not there yet because our prices have been relatively high, but it's something that operators aim towards. I think particularly the Indian operators coming onto the continent as a business model going forward. That also means that revenues from voice are going to be tapering off, possibly decreasing, and that's why operators are beginning to look at opportunities in the data and value-added services, these other revenue streams, in order to make up the revenue and to move forward.
Well, you're talking about mobile termination rates, and we know that's pretty much been a topic of conversation when it comes to the South African market as well. But at the end of the day, it didn't really cost operators a lot of money, right at the beginning. Why do you think they've gotten away with it for such a long time, and only now the communications commissions on a global level, and perhaps more so in Africa, are really starting to make a change?
It's partly historical, partly competitive forces in the market. Because operators, effectively mobile communications were historically considered to be more of a luxury, then they moved into mass market, but operators were able to retain a premium because mobile communications were considered to be effectively more of an added-on service to fixed-line communications, and the privilege of being able to access it anywhere within coverage and be mobile at the same time. Now that's obviously changing for two reasons. One is the competition is increasing across the continent, and secondly, since they have started to become mass market communications means, this has been a lot of protest maybe on the rise with respect to the cost of usage of those communications, and that drew the interest of governments and in turn regulators in the various markets, and how to address it to make that communications even more widely available, because it is the basic pretty much service that
and of course,
across Africa
penetration rates across the continent, we still have a lot of room for growth. Kenya in particular, we're looking at a penetration rate relatively close to 40%, so there's a lot of competition there. Competition is becoming rife. You've got the commission stepping in and trying to lower rates as well. Average revenue per user, though, is getting lowered. What do you think most companies are going to be focusing on to ensure that revenue streams stay robust?
Well, again, as indicated before, as voice tariffs decrease, the revenue is going to start stymieing and decreasing as well on voice revenues.
I think it's about data, though.
Operators will move towards try to be more data heavy or focus on data as a means of trying to make up the revenue loss or revenue stagnation. Also push more voice minutes, but it is going to start moving towards broadband, and that's where the focus lies.
And I suppose most of these companies are becoming innovative as well, with Safaricom in particular. I mean, when you see their announcement of dropping SMS rates to 0.2 shillings per SMS, they are saying that you need to buy a bundle, though. So,
well, yeah, you need to buy a bundle, and they're still making money on it. So first they were making a killing, now they're just making a bit of a profit. But yeah, it's how you bundle services.
We know what's been happening with MTN, talk about tying up with an Indian company as well, and we know that Bharti Airtel is very much in the Kenyan market right now. How do you see the dynamics changing on the continent, and do you think we're going to be seeing a lot more interest from international multinational companies?
Well, first of all, changing dynamics. What Bharti and the Indians are likely to bring into the market is more price competition, because that's the model they know in India and they've developed in India, and they will try to lower prices, compete more on prices, and try to generate greater volumes. That's going to, I think, probably fairly fundamentally change markets in many African jurisdictions, in how other operators approach the market and the ability to compete with the likes of Bharti in the future. As far as future interest in the continent goes, that's certainly will be interest, but from an M&A, merger and acquisition perspective, it's quite limited, because by now all the major groups, operator groups across Africa have been purchased, acquired by various other operators, either within the continent, such as MTN, or outside of the continent. What remains is relatively small licenses and very few greenfield licenses and smaller operators. So I think from that perspective, we'll probably see a fair amount of stability going forward in terms of large acquisitions, but there will be small acquisitions here and there. Operators will start focusing on buying data service providers, data operators, in order to try and expand into that market segment.
And of course, we know Safaricom is also hunting for those new opportunities.